As we approach the end of 2021, we're starting to see our final few volatility trades that are setting up in the markets. Today was no different. Today we had trades set up really in the major index markets. Those were the focal points of today. And that was in between the 9 to 10 a.m. Pacific hour when we had a nice sell-off in really the S&P, the Dow, and the Nasdaq where we had opportunities trigger. I'll discuss all three of those opportunities in today's video, but first let's break down what actually happened on a high level. The S&P and the Nasdaq were both on their Scalper Volatility Box models, while the Dow was on its Aggressive Volatility Box models. In layman's terms, that means the Dow was more volatile, the one you may want to be a bit more careful with, but also the one in which you expect to see a bigger reward given that you have to take a bigger risk. Now in the S&P, while being on the scalper, we had one trade that set up. That trade required 5.25 points of risk at the bare minimum, and that's what it paid us. So a positive 262.50. It was a nice winner, hit the first target, but that was pretty much it. Inside of the Nasdaq, similar concept. Off of our scalper models, we were looking for a trade in which our risk required was 20 points at the bare minimum. We hit the same 20 points in the opposite direction, our first target, so a positive $400. Now if we focus in on the Dow, a little bit different here. The Dow, we were on the aggressive models. Our bare minimum risk required was 50 points. We hit not only that 50 points, but we also hit our second target, which was positive 105 points. And that's where a majority of today's gains came in. So in today's video, I'll be breaking down all three of these trades, but spending a little bit more time on the Dow, just so we can analyze and dissect this 105-point win and see what was different there in comparison to the S&P and the Nasdaq. Now, in case you'd like to download the Futures Volatility Box or learn a little bit more around the setup, the rules, things of that sort, you can do so on our website, tosindicators.com/volatility-box/futures. We also have a stock volatility box in case you're interested, but today's video is focused mostly around our index markets. Now, if I come inside of our S&P here first, let's zoom into that 9 to 10 a.m. Pacific hour when we saw the volatility come into the markets. That's where price action breaches our sign entry line. This is step one. We then are looking for an oversold confirmation with these green arrows. We see two, so that's step two, meaning both of our rules have been met. As long as we have an entry better than the sign entry line, the trade is a go. And in this case, we had a much better entry price in the S&P. In fact, our risk here was cut almost in half, which is a really nice way to participate in the scalp trade. Now, our risk on this trade, if you were using the sign entry line, was about 5.25 points. That was the bare minimum risk involved, and that's what we were looking for on our first target as well, 5.25, which again, with the better entry, really was closer to 7.25, maybe even 7.5 or 7.75 points of a positive gain, depending on where you actually got your entry. So the idea here is, while this was a scalp in the S&P, it was a really nice scalp that you had nicer winners in, given that you had a much better entry price. If I move on next to the Nasdaq, very similar setup here. If I come right back into the 9 to 10 a.m. Pacific hour, we had price action sell off inside of our volatility box sign lines. So this is step one. We then like to see our oversold confirmation. This green arrow, we saw two very similar to the S&P. So step two met right here. And we'd like an entry at the sign entry line or better, and we had plenty of opportunities to do so. Similar to the S&P, you could have also cut your risk again by as much as half, depending on where you had your entry price. Our bare minimum risk on this trade inside of the Nasdaq was 20 points. We were looking for the same 20 points on the opposite side, which we hit, before then finally reversing and taking out the final contracts at break even. So the S&P and the Nasdaq, nice bounces from our scalper models, but gave us only a first target, falling short of the second target on the opposite side. Now let's move into the Dow, which the Dow was on its aggressive volatility box model. So if I load in the aggressive, and let's take a look at the same 9 to 10 a.m. Pacific hour, you'll see the trade here looks a little bit different. Inside of the Dow, price action breaches our sign entry line, so that's step one. We see our oversold confirmation arrows, two again, so step two is met, and we have an entry at the sign entry line or better. Now, unlike the S&P and the Nasdaq, the Dow had almost what you would call a V-shaped reversal. From our entry price, we bounced straight up. We hit our first target. Stop was moved from outside of the clouds to break even. That break even was not even remotely close to getting touched all day long. Our second target was at the gray target line on the other side, 105 points from our actual entry. You can see that right here, 105. And that is where this nicer winner inside of the Dow actually came into play. It's being able to use the aggressive volatility box models, know the exact place where we're looking to pinpoint this reversal along with the rules, and then looking to see how high is high, trying to see if our second target, which gives us a really nice home run sort of trade, actually gets hit with a break-even stop. This is exactly what's set up inside of the Dow, and we were able to catch a pretty nice reversal in this market along with the S&P and the Nasdaq. Alright, I hope this video was a helpful demonstration in how you can use one very simple setup along with our futures volatility box to capitalize on this volatility whenever it actually does present itself in the markets. You'll see here today, for example, the S&P, the Dow, and the Nasdaq, all three gave us fairly nice trades, fairly nice winners, consistent process, the exact same trade setup on each occurrence, no discretion involved, which allows this to be a repeatable process that you can use to consistently grow your account. All right, take care, everyone. Good luck trading, and we'll see you in the next update.